Hey everyone, hopefully you are enjoying our Global Supply Chain Week here at FreightWaves, coming to you from Chattanooga. I'm Zach Strickland, Director of Freight Market Intelligence. With me, Anthony Smith, Lead Economist, and this is our Freightonomics podcast that we do every week here at FreightWaves. If you are interested, we do speak to the global supply chain quite often on the show as we talk about everything that's interconnected around the globe and everything that is impacting the supply chain environment itself. But first, before we dive into the show, we've got some giveaways, do we not?
We have some giveaways, yeah.
So let's, we've got well, didn't you want to reveal this? Wasn't this going to be your big reveal?
I mean, it is a big reveal, but this is, as Zach mentioned, Freightonomics, and this is the global supply chain. So this is a bit of a special edition for us today. Not only that, we have a special guest coming on. In the next segment, we have a giveaway. As always, we have to tell you or remind you, because usually we have our chat in on LinkedIn.
Yes.
And so if you're watching LinkedIn, be sure to know that you can check us out on live.freightwaves.com. So there's an even bigger conversation going on there. And if you're there, you can check out the virtual booths. You can check out the channels. We have ArcBest, Blue Yonder, Echo. So we have different channels for each individual breakout here. And so be sure to check that out. Zach, it's been an amazing show so far. We've just had Gary Vee not too long ago, earlier on in the morning with Steve Ferreira. We had Kelvin Beacham on as well, and so there's been some amazing talks.
Yeah, I love the Kelvin Beacham one.
Yeah.
The athletes talking about the investment cycles. I mean, we've heard about it. You know, you think about the millions of dollars that they have, and they go in and they're, they have these careers that a lot of them are very short. I think the average NFL career is less than 2 years.
Yeah.
For the most part, even though they're making $1 million here and there, but it's, that's the rest of their career. So they've got to go on to find other ways to make money. So that one was really enjoyable for me. I also enjoyed listening to the one between JT and Brian Away.
Yeah.
Talking about the freight tech trends, and of course, making a little jab at the supply chain visibility tech that people were, kind of sniffling about, or making snide remarks about in the past. Not necessarily taking it too seriously, and then all of a sudden 2020 hits, and what's the big hot topic?
Yeah, supply chain visibility.
Where's my freight?
Yeah.
So, a lot of good talk today. Again, just Peter Sand before this talking about containers and the new normal with Greg Miller there. They both kind of made some comments about how this new normal phrase, it's kind of buzzwordy, a little trendy, and nobody really knows what the new normal is going to be, but it's more like, is this going to last?
Yeah.
And we're going to hit on that here in a little bit. We've got a little game set up that we're going to play. And maybe will it last is a better term than will it matter?
Right, yeah. And I mean, the other one the main takeaway I loved from Gary Vee and Steve Ferreira's one was just the importance of personal branding and how much that's really going to matter. And the other thing is tailoring your content to the appropriate audience. So he spoke about, I think, Clubhouse, LinkedIn, Facebook. So talking about you can copy and paste, of course, but it's not going to give off the correct message for each platform. So looking at who you're talking to, how you're going to brand yourself, being able to get active in comments, being able to reply. And so there are a lot of gems in that, as always, whenever we have Steve Ferreira, and especially with Gary Vee. So as always, looking forward to more content from Steve Ferreira. But as you mentioned, we have a giveaway, Zach.
We do.
We have our first giveaway. It is an Apple 4K TV. The lucky winner is Brian Hall of B&M Bowman.
Right on. Okay.
That was
a little delayed drum.
Yeah, slightly, but that's okay. But Brian Hall, congratulations. You are the winner of the 4K Apple TV. And hope you enjoy it. We have another giveaway coming up a little bit later on, right around the lunch toss. There's going to be an Apple Watch, so stay tuned for that.
Yeah, exactly. So before we go into our next segment, we normally do some top stories, but we're going to do a little spice it up because we talk about everything's obviously very volatile right now, and everybody's talking about the new normal, as we just mentioned. What's it going to look like? So some of our top stories, I'm going to ask you, will it matter, or will it be part of the new normal after all this is said and done here in 2022? Hopefully, all of it's said and done here in 2022 with COVID and everything. So the first story I have here is, Eric Coolidge, our air cargo writer, transport buyers dig deeper into wallets for air cargo. So basically, businesses are now paying about 2.5 times more to book air shipments than in previous years. And that's expected to continue throughout the next little bit. So air capacity, obviously very reduced over the last bit. The maritime sector, very constrained on their capacity. Are we going to see this problem persist into 2022?
So I think we are going to see it persist, and I think there's going to be an adjustment accordingly. So I think it matters near term and the adjustment for it, but I think long term there's going to be adjustments made. I think long term it doesn't matter, but I think near term, okay, we're going to be finding how to adjust and how to adapt to this new scenario, this new pricing, all that. But I think long term doesn't matter.
Yeah, so passenger belly cargo comes back online with the passengers. Everybody's excited to go travel again. Gets out in the world. We have a new pandemic. No, hopefully not. But yeah, I think the air cargo side is well served after the passengers come back online. I don't know, obviously a lot of the container side stuff should have some sort of resolution here in the next few months, maybe the next year. We don't know. We'll see. The next one up is going to be the Walmart beats Amazon in circumventing congestion. So Walmart basically has gone around and figured out a way, and this was part of our talk last week at the Global Supply Chain week, and they've been able to more diversify their spread of container flow across into ports in the United States, whereas Amazon's been largely concentrated at the Southern California ports. Will this matter in 2022?
No. I don't think it's going to matter in 2022. I think Amazon is going to be, for how big Amazon is, they seem to adjust pretty quickly. And so I think it matters near term, because it's like, how did Walmart get the jump on us? Because usually we don't see that. We see Amazon really, as of late, being the leading force of dictating what happens, what's the newest way to go about transportation, what's the most efficient way to go about things. But this is surprising to see that Walmart, and that kind of dives into a point that Andrew Cox and I had earlier on last week, is that Walmart is a tech company, essentially. And so I think tech, it's been the common theme throughout all these days, is how much technology is playing a role. But I think long term, it doesn't matter. Amazon's going to adjust accordingly.
So that's actually the reason I think it does matter. I think that Amazon will adjust, but that's going to create a much bigger ripple if you have both of these two retail behemoths. The National Retail Federation forecasts retail sales will grow 6.5 to 8.2%, with the majority of that coming from the e-commerce sector over the next year. So again, the retail sector is at a booming, left a big mark on the economy over the last year. So I think that as more of these companies lead the way, these Amazons and Walmarts, we're going to see a little bit more even distribution throughout some ports. And of course, nearshoring, reshoring, and all that will also play a factor in this. So one more before we take a quick break. So this one's got a lot of hits on FreightWaves.com. Kim Link-Willis, talks about how ocean carriers take heat for profiting so handsomely while service plunges. Now, this is obviously a situation where the maritime side, not enough containers, they can't get their freight over here, and then they're reporting these huge profits, billions of dollars of profits. And I think they were $800 million or $900 million increase year over year, Hapag-Lloyd reports. Is this going to be a thing, over the next year?
I don't think it's going to be a thing over the next year.
No?
No. But I think it matters. I think it matters. I think we're looking at, this reporting. I think there's going to be adjustments made in order to kind of get either more visibility or really kind of figure out what was going on. But I think it does matter.
Okay. Yeah. So, I think it definitely matters in the way that this just shows some additional strain between shippers and, the transportation providers. They're not going to have these profitable, this amount of profitability over the years. And, what happens to these people that are complaining about, not getting service now, which rightfully so, what happens when they don't have as much demand and they're not rushing to restock inventories, and now these containers are now oversupplied and strewn about the, the world with no freight on them. There's a big trade-off here. The forecasting piece is definitely a big factor in all this. So, I think it definitely matters. I think it's going to continue to matter. I think it's going to leave some sour taste in some of these shippers' mouths over the next little bit.
Definitely. I think that's a good one to end on. And we're coming up on a break now, but up next we're gonna have Dr. Zac Rogers on with us, talking some of the latest LMI, the Logistics Managers Index. So,
Dr. Z, we were just talking about some of the, obviously a lot of reorganization on supply chain networks here over the last bit. You are, of course, heavily ingrained with a lot of these companies. You are one of the main contributors to the LMI, Logistics Managers Index. So, since we do have a slightly different audience this week with the Global Supply Chain event, why don't you tell us a little bit about you and the LMI?
Right. So, I'm an Aquarius and I like to walk on the beach. But the LMI is the Logistics Managers Index. And the Logistics Managers Index is a change index that we do every month. Today's report actually just came out about 3 hours ago. So this is and was done being written about 6 hours ago. So this is fresh new information. Essentially what we do is we go out and we ask a couple hundred director level and above supply chain folks, hey, inventory levels, inventory prices, transportation, warehousing, are things going up? Are things going down? Are things staying the same? We use this to create a change index. And essentially the way you would read this, and you can read it at the-lmi.com, the way you would read this is any number above 50 means there's growth. Any number below 50 means contraction. It's very similar to the way the Purchasing Managers Index would work. People are familiar with it. So this month, we like I said, we just released the new numbers. And I think it really goes a lot with what you guys are just talking about. So transportation, all three price metrics, right? We're talking about it's so expensive right now to work in the supply chain. We have three price metrics that we check: transportation price, warehouse price, and inventory costs. All three of those metrics are at 28-month highs right now. So the highest they've been since Q3 of 2018. Now, again, we're talking in terms of growth rates. And so transportation prices are growing at an 88. Warehouse prices are growing at a 79. Both of these are really high numbers. And it has to do with, just like you guys were saying, a lack of capacity. And I'm getting the same feedback that you are. I read the Link Willis article yesterday, actually, that there's this sort of tension building. I mean, if you look at prices right now for just say, sea freight, it's like $5,000 per 40-foot equivalent unit right now. I mean, yep. It's like 70% more expensive than this time a year ago, and schedule reliability is like cut in half from the same time. And so essentially the value proposition that these carriers are asking the shippers to deal with is, hey, what if we charge you double the price for half the service? That's essentially what the question is right now. And so it's no surprise that we have all these carriers who are really frustrated. Now, what do you do in that situation? I mean, there's not a lot of good ways to get things from, the side of the Pacific Ocean where we make everything back to the United States. Especially now because you're having, when you have 58 ships either in the port or outside the port of LA, containers are going to be really slow getting back to China, which means they're going to be slow getting back to the United States. And we're going to get kind of in this negative feedback loop. And I don't know what the answer is. I mean, the Port of Georgia just expanded by 25%. Maybe you go all the way around and start shipping stuff to Savannah. Maybe you see more stuff going to Portland. Maybe even west coast of Mexico and then go up by train is something I've seen some folks doing. So there's all kinds of problems right now and really high prices. Like I said, higher rates of growth in price than we've seen in almost 2.5 years, due to this real tightening in capacity that we see in the supply chain.
Yeah, and of course the LMI is heavily focused on the domestic side. You just measure what's happening in the United States, correct? Mm-hmm. Or largely North America.
We get a little bit of both. But we are more heavily United States. Yeah.
Okay. Yeah, I think it is a fascinating thing because I don't see a real clear solution. I think the long game shows that, maybe they shouldn't, take as high of a rate, but it's really the shippers that are bidding the prices up, are they not?
No, you're absolutely right. You're absolutely right. And in many ways, it's the customers that are forcing them to do that.
Right.
If the pandemic taught us anything, it's that we can all sit at home push a button on our phone, and pretty much anything should be able to show up in the next 1 or 2 days, right? And so the only way to make that level of service work is to have a constant stream of inventory moving in. And we got, two things happen. We got so far back in the hole last year. Next week is going to be 1 year since the big lockdown happened. Since, there was that day when suddenly we weren't playing basketball and Tom Hanks was sick and everyone was like, oh, I guess this is a real thing. So that was a year ago next week. Over the course of last year, port traffic was actually down by 1% year over year. Next week, it's going to be up 505% year over year from the same week. That's mind-boggling. That's just the Port of Los Angeles. So that shows the hole that we're still trying to dig ourselves out of. And on top of that, when we look on more at the domestic side and we look at trucks and warehouses, well, if e-commerce was supposed to go up by 15% last year, but it went up by 45%, that means that we essentially skipped forward 3 years and 9 months. And so we have 3 years that we moved forward in terms of demand for supply chain capital, and we've only had 9 months to make up the gap. And during those 9 months, a lot of companies have been really tight and squeezed for cash. And so, we were talking about, is this a problem that's going to last a year? Yeah, I think so. We ask our respondents, hey, what do you see happening in the next 12 months? And it's interesting for warehouse capacity and transportation capacity. Essentially, what they predicted was, it'll grow at a rate of about 59. Remember, 50 is break even. So 59 is a very moderate pace. And it's actually what we would see in a normal year. We add a little bit of capacity every year as we go up incrementally. The problem is that last year demand didn't go up incrementally. It went up like hockey stick. And so in terms of price growth that our respondents are expecting for next year, an 81 for inventory, a 79.9, so essentially an 80 for warehouse utilization, and an 87 for transportation prices. Meaning that even though we're going to be adding capacity, price is going to stay high and keep getting higher at least through 2021.
Wow. I mean, those are, and you're talking about the 79 and 80 in relation to the diffusion index, where it's above 50 is expanding, yes. Below 50 is contracting. So 80.
And the average numbers for these metrics would be like 63.
Right.
64.
Right.
And they're predicting, high 80s for the next year.
Well, Dr. Zac Rogers, we want to be mindful of your time. We know you got a class to run off to make sure that the young minds aren't
Gen
missing.
Z, these kids are so sensitive. They're like, we can't start class unless the professor gets here. And I don't know. I mean, in my day, millennials were fine to just sit there and play on our phones. And if we only had 20 minutes, so be it. So the new generation, they're too sensitive.
Yeah. So let us know real quick how to get more in touch with you and your crew with the LMI.
Absolutely. So like I said, all of our reports are posted at the-lmi.com. The new report just went up this morning. If anybody, would like to talk about becoming a member of our respondent board, we're always looking for more, expertise. And we have people upstream, downstream, all over the supply chain. You can send me a note at zac.rogers, ROGERS, at colostate, COLO state, .edu. Cal State has the CSU suffix, so we had to extend ours out. But send me a note, and I'm happy to add you to the list, get you on the distribution list for sure for the report, and of course you can see me every month on America's #1 freight and economics podcast.
Right on. Well, thanks so much for coming out and go and educate the next generation so that we don't end up in another situation like this.
We'll do our best.
All right.
Thanks, guys.
Thank you. Well, I mean, so that's amazing to me that there is a forecasting aspect to the LMI that they ask about what their sentiment is about moving forward. Now, I think a lot of people have thought, okay, this can't last forever. This new normal, pandemic. The pandemic's going to subside. We're going to come out of it, then eventually we'll go back to the way everything was before.
Yeah.
I don't think that's 100% accurate. I think that we have had, and buzzword alert, a paradigm shift. I think we have seen some behavioral changes that are going to stick and persist, that are going to be reminiscent of what we've seen. He was just talking about e-commerce growth. Mm-hmm. There's certain things that are going to stick around for the short term, obviously, in a little bit of an exaggerated state. But a lot of these shifts People working from home, for instance, they figured out how they've forced people into building these infrastructures, into working from home, being available online. Obviously everybody's been on a Zoom call in the last year.
Yeah.
Now they've adapted to it and figured out how to use this stuff to maintain productivity. And I think that's really going to help us moving forward, kind of keep some of this, shifting into this new normal environment. What do you think?
Yeah, I think, well, one aspect of that I love that future expectations component to the LMI. And knowing that they think even with capacity coming down, even if it's not going to be that strain, that prices are still going to be elevated. I think that speaks volumes. And so knowing that is like, that's going to be on people's mind. That's going to be on managers' minds. How are they going to adjust? They're going to act accordingly with expectations that those prices are going to remain elevated. But Zach, just as you mentioned, this is going to be, people have adapted and adjusted to this. On the e-commerce realm, Zac Rogers alluded to this. Now people are used to being able to just, push a button and it being there at their doorstep, within either that day or the next day. And so I think we're adjusting now. I think people have adjusted. Those that want to work remotely are going to work remotely, and businesses that no longer need that overhead of having this big, expensive office space, that's not going to be a thing. I mean, we're seeing it in all the numbers. We're looking at construction spending. Office spending, of course, is one that's gone down year over year tremendously. But we're going to see shifts all over the spectrum. I mean, even with housing. People are going to be looking to move now. We're seeing a lot more activity in the Midwest and South from those more populous areas in the Northeast and some parts of California. So there's been shifts all throughout the economy.
Yeah, I was listening to Bob Corker and Craig talk yesterday about some of this spending. They covered just a wide range of stuff on that. I recommend everybody go back and watch that one more time if they haven't seen it already. It's pretty tremendous about how much stuff, a little back insight into that political environment. And, he talked a lot about bipartisan communication, trying to move things forward. And you get a little bit of that insight into how the political mind works and things you have to do necessarily to get stuff done. So very fascinating there. But he was talking about how he did anticipate people going back into the office to an extent. I read a study that also kind of supports this. Optimally speaking, and this of course is an aggregated study, depending on your environment, tech companies, for instance, probably have a little bit wider range here to work with, where working from home about 1 to 2 days per week appears to be the most productive measure. So not having everybody in there all the time, obviously, but there is the optimal efficiency level happens around 1 to 2 days working remote per week, which I found was fascinating that they actually did this study and found some sort of result from it.
Yeah, and it's interesting because that's the cultural norm for some Nordic countries. I think they usually work at least 1 day remotely. That's like a thing that's built into their society. So I think it's going to be cool to see what kind of things we have that stick around from this whole pandemic. But it's kind of plays into the millennial playbook a little bit because millennials, I think, have
You're
been...
a millennial.
Don't tell them that. But millennials have been wanting to, work remotely, or, if I don't need to be in office for this, why are we doing this? So I've always heard those points come from those millennials talking about, why are we having this meeting? So I think that kind of gives a lot more, credence to, being efficient, making sure we're using our time effectively. Do we all need to be here for this? And so I think that's going to be one of the positives that we see kind of coming out of all of this.
Yeah, and I think as it impacts the overall global supply chain world and environment, that's just going to mean that people are going to need technology more. We're going to be relying on a lot of technology, and technology changes now. Like what used to be back in the 90s, the PC was really the first big economic boom. That was the big product that really thrust the economy forward fast. It was one of the largest expansions of our economy in my lifetime. Followed by a recession, as they normally do. Nothing lasts forever. And then, that kind of died out. And then it took a few years for the next kind of technological boom driven by a lot of what you see here. The iPhones, other electronic devices really drove a lot of economic expansion. Of course, the real estate bust back there around the Great Recession put a notch in that, but we've seen this actual relatively stable environment growth after that period of time. No thanks to COVID, we had a little interruption, but still, I think a lot of what we're going to see moving forward is this consistent building of technological advances. You're an economist.
Mm-hmm.
The one thing that was ingrained in me back in my Econ 201 or 301 day or whatever it was.
You never made it to 301.
You're right. I think I woke up for a minute. And then, so I heard her say, there's two things that improve your quality of life, which should be the goal for, economies around the world. Improvement of the quality of life for its people.
Yeah.
Technology and education.
Yeah.
So if we are pushing forward on the technological aspect, quality of life for everybody improves. There's still going to be a lot of goods to move, a lot of stuff to manufacture. It means things are going to have life cycles that are going to be shorter.
Yeah.
And I think that's only going to continue to perpetuate a lot of what we're seeing right now. E-commerce is here to stay. That's not going to decline anytime soon. I do think that some of these capacity constraining issues that we're seeing, that we're dealing with, that Dr. Zac Rogers was talking about, we'll see some of that, correct itself as it does over time. Every system does move towards an equilibrium. It cannot stay out of balance forever, whether that be on the buy side or the sell side of capacity. The shipping side is going to come back to where it will hover for a while. It'll be a little bit more stable there. These erratic price movements will not stay.
Yeah. I mean, I think a good form factor of all of this is going to sound strange, but cell phones. So like when cell phones really kind of hit the market, there were all these different types of form factors. And so there were these cool flip phones. I don't know if you ever had the Sidekick, these Palm Pilots. There were all these different types of phones that came out. Now they're all kind of the same, format. They were all over the board. Then it kind of settles like, okay, this is going to be the form for moving forward. It's going to be this, it used to be like, how thin can we get it? How big can we get the screen? Now it all kind of looks like the average Google Pixel or iPhone if you're into that thing. And so it's all kind of getting into the same form factor. And now we freak out when, hey, there's going to be a folding phone now, the Samsung Fold or whatever it might be. And so it all kind of settles into one, unified form factor.
All right. I got a question for you.
Let's hear it.
So we're seeing air cargo rates, maritime rates, obviously well elevated year over year right now. Where do you see them in terms of either a multiple or a, percentage of where they are today in a year from now? Hot take, it's going to be recorded for posterity. So you're going to posterity. So you're going
record it.
So here
going
comes.
Down.
Going down. Where's it going to be? On the maritime side. So they're at 5K right now.
Mm-hmm.
So this time next year, we're going to look it up. 5K, where are we at?
I say it goes down by roughly 40%.
40%. So we're going to be at 60% of 5K.
Yeah.
So do the math. What is that? $3 grand?
I'm not doing math.
That's what I'm going to call it. $3 grand. So $3 grand this time next year. So that's actually well above where they were, and this is spot rates for 40-foot equivalent units.
Yeah.
So that's still well elevated where we were.
It is.
We were at $1,000 before this all started.
Right.
And that's the Trans-Pacific lane.
So we're, play the tape. Play the tape a year from now. Also, this is going to be wrapping up soon. So I have to give a shout out to some of the things that we have coming up here. Coming up next, we're going to have Nick Austin chatting with Captain William Rochira from the Coast Guard, how they break the ice for smoother shipping lanes. We're going to have Steve Ferreira back, of course, chatting with Gordon Downs, talking about navigating volatility and unpredictability. So looking forward to that. So we have a lot of cool content coming up. And then we're going to have our lunch segment. And guess what, Zach?
Are we going to give something else away?
We're giving something else away.
I mean, that's what else could we possibly give away?
I don't. Let me see. It's an Apple Watch.
Apple Watch coming up.
So hopefully you have an Apple device and it's going to work. And, if it's like me on an Android, do they work on Androids?
No.
Okay, so they don't work on Android. So hopefully you have an Apple device to pair along with this Apple Watch. Thank you so much for tuning in. This has been Freightonomics. As always, you can check us out on, what's your handle?
My handle?
Yeah.
You can check us out on Freightcast. Make sure you download the app and make sure that you check out all of our other podcasts.
Yeah.
Enjoy the show.
So you're like,
Oh yes,
on Twitter.
Yeah,
The Twitters.
yes. I even forget what it's called.
Find me on